The zero-growth decade in Japan, also known as the Lost Decade, was a period of economic stagnation that had far-reaching consequences for the country. It all began with the asset bubble burst in the late 1980s, a time when real estate and stock market prices were skyrocketing due to speculative investments and easy credit. The bubble burst in the early 1990s, leading to a sharp decline in asset prices that wiped out vast amounts of wealth and triggered a prolonged period of economic hardship. One of the key factors that exacerbated the crisis was the banking crisis that followed the burst of the asset bubble. Japanese banks had made extensive loans based on inflated asset values, and when the bubble burst, these loans turned bad, leading to a severe banking crisis. The financial sector was burdened with a large amount of non-performing loans, which severely restricted its ability to lend and support economic growth. As a result of the burst asset bubble and banking crisis, Japan entered a deflationary spiral. Falling prices led to reduced consumer spending and business investment, further worsening the economic situation. Deflation also increased the real value of debt, making it harder for borrowers to repay loans and adding to the financial strain. In response to the crisis, the Japanese government and the Bank of Japan implemented various measures, such as fiscal stimulus packages, lowering interest rates, and injecting capital into banks. However, these measures were often criticized as being too little, too late, and not always effectively coordinated. The structural issues in Japan, such as an aging population, rigid labor markets, and a lack of innovation in key sectors, also hindered economic flexibility and growth. The global economic environment also played a role in exacerbating Japan's economic woes. The Asian financial crisis in 1997 and the dot-com bubble burst in the early 2000s affected global trade and investment, impacting Japan's export-driven economy. These external factors further contributed to Japan's economic struggles during the lost decade. The long-term consequences of the lost decade were profound. It led to a cautious approach to investment and spending, both by businesses and consumers. The demographic challenges worsened as the population continued to age, and Japan struggled to return to the robust growth rates it experienced during the post-World War II era. The lost decade offers several key lessons for policymakers and economists. It highlights the dangers of speculative bubbles and the importance of financial regulation to prevent such crises in the future. It also underscores the challenges of dealing with deflation and the importance of timely and effective monetary and fiscal policy responses. Additionally, the need for structural reforms to enhance economic flexibility and innovation is a key lesson learned from Japan's experience during the lost decade. In summary, the zero-growth decade in Japan was a complex period marked by the collapse of an asset bubble, a banking crisis, deflation, and structural economic challenges. It serves as a significant case study in economic policy and the management of financial crises, offering valuable insights for policymakers and economists around the world.